Shaykh DeLorenzo is also no stranger to the academic world. He was the lead professor for the Principles of Islamic Investing, a course developed by a group of scholars including Dr. DeLorenzo himself and Mufti Taqi Usmani, who is no stranger. Dr. DeLorenzo, after returning to the US, also for years has been a member of the Shariah Supervisory Islamic Financial Boards that is internationally recognized and renowned. Obviously, we're very blessed to have him in our presence and to have the opportunity to learn from him today. I want to thank everyone for attending. Without further ado, Shaykh Yusuf Delorenzo.
Bismillahir Rahmanir Rahim. Alhamdulillah. Wassalatu wassalam ala Muhammadin al-Mustafa al-Amin wa ala alihi wa ashabihi ajma'in. Thank you very much for attending this evening. I look forward to coming to your community maybe in the future as well. I've been very impressed with my short visit here, and I feel as if maybe I should have been here years ago. But mashallah, you're to be commended on what you've managed to accomplish. Can you hear me back there? No? Yeah, big mic. Yeah, this is... I can leave that? I feel like I'm in the hospital here. I get electrocardiogram or something, some kind of, all of these wires and everything. MashaAllah. Is this backwards?
Okay, you should be good.
Okay, good. Anyway, thank you very much for taking the time to stay back a little bit and listen to me talk this evening. I love to talk about what I do, and I hope that you'll bear with me as I do so. I wonder, I'd like to start with maybe a couple of questions. Let's talk about commodities since we're on the subject of finance. So who can tell me whether water or petrol, pint for pint, quart for quart, which one is more valuable? Water, mashallah, alhamdulillah. وَإِنْ أَصْبَحَ مَاؤُكُمْ غَوْرًا فَمَنْ يَأْتِيكُمْ بِمَاءٍ مَعِينٍ. If your water disappears down a hole, then who is going to bring you water flowing other than Allah subhanahu wa ta'ala? Water. What about gold? Is gold, pound for pound or ounce for ounce, more valuable than spice today? Spice. Which spice? Anybody know? Pakistan spice. Zindabad. No, saffron. Saffron, right? Well, it's always been that case. It's always been so. And this is an interesting thing. In the from the early days of the Prophet alayhi salatu wasalam and the Sahaba ridwanullahi alayhim, spices have been very, very valuable. And the spice trade was a thriving trade even in their time. You all know about the Rihlat al-Shita wa-Sayf, the caravans that cross the deserts in the summertime and in the wintertime, in the different seasons. Our predecessors were tujjar. They were involved. They were traders involved in commerce, and they did a great deal of it. And it was part of the way. In fact, it was the main way that the religion of Islam was spread, that the word of Allah got out into the world by means of ordinary, everyday Muslims like you and me, people who were involved in trade. Of course, the great fallacy that the Mustashrikeen and others Orientalists would have us believe is that, no, Islam was spread by the sword. No, it wasn't at all spread by the sword. It was spread by simple hand-to-hand human relations based on commerce and trade. We had managed, our aslaf, our predecessors, spiritual predecessors, whether regardless of where we come from, they conducted trade internationally, across borders, across oceans, across continents. Very effectively they did this for years and for centuries. Did they need banks in order to accomplish this? Anyone imagine the Bank of Rangoon in 505 Hijri? No. There weren't any banks in those days. We didn't need them. We had established incredible networks of trade that were incredibly successful for centuries, until along came the Europeans and messed everything up. Literally. The spices in the islands of the Philippines, the far-flung islands of the Philippines, for example. I'm thinking of nutmeg, specifically, were extremely rare and extremely valuable. Nutmeg apparently is only grown on a handful of little islands, and it can't thrive anywhere else. But it was a major spice. And somehow the Europeans discovered that nutmeg, they discovered the way to the nutmegs. I think it was the Portuguese who did it first. And they took their swords and slaughtered everybody along the way until they got that nutmeg. And then they slaughtered anyone who got in once they got the nutmeg, they slaughtered anyone who got in the way of their taking that nutmeg to market. So from about the late 1400s, into the 1500s, the 14th, 15th century of the Common Era, all of these trade routes were suddenly destroyed. But there was an amazing network that we had established. It went from the Red Sea, from Cairo, from Egypt down the Red Sea into Yemen, and then in Yemen the Hadramatis had established regular trade, not only with the Gulf, the Arabian Gulf, but further east towards Bombay, around the subcontinent to the other side to Malabar, stopping in Sri Lanka, or what was called then Sarandib. And at each place the Muslims had established trading posts. And we were the most successful traders for centuries in all of those places. And then we headed further east. We headed towards Burma and down the coast of Malaysia to Malacca, the Straits of Malacca, and into the Pacific, all the way to China, Shanghai. And in every one of those ports, not only were there Muslims, Muslim trading houses, Muslim traders, most importantly, there were Sharia courts. That was the cement that held these networks, these complex networks of trade together, the Sharia. How is that? Well, it's simple. Let me give you the example of Abu Ismail. Abu Ismail, we have detailed historical records of Abu Ismail. He was a trader. He was the head of the trade guild in Cairo. He controlled ships that went all the way from Yemen across the oceans to the Philippines and to China as well. Abu Ismail was confident that his ships could go to sea and come back they could go to sea with one sort of cargo, for trade, and they could make their way along these different ports, finally ending up in the Philippines, where they would load up on spices, and then make their way back, all the way back to the Red Sea, and then the goods would be brought overland to Cairo, and either sold there or transported onward into the Mediterranean for trade further along. His confidence was based on the fact that in every one of those ports, he was assured that his cargo would be safe because there were courts, Sharia courts, that would look after his cargoes. In other words, if any sort of dispute broke out, if any kind of if part of the cargo was lost as a result of this, that, or the other thing, whatever the reasons might have been, you could always go and for recourse to the courts, the Sharia courts in those ports. And if you, for example, were a Yemeni and your particular madhab was Shafi'i, let's say, and you had some difficulties with your cargo in Malacca, in Malaysia, well, then the captain of your ship could go, or your representative, your trade representative, could go to the Sharia court and ask for a judgment from a Shafi'i qadi. Or if he was a Hanafi, he could ask for a judgment from the Hanafi qadi. And if money needed to be transferred in a Sharia compliant way, he could have that done as well. So what I'm trying to say is that we managed to trade across borders, across continents, across oceans, very successfully and for centuries without the help of any banks. There was no need for it because we had a system which was recognized by everybody. And if the details were a little bit different for someone coming from a Maliki background or coming from a Hanafi background, we had the courts in place all over the world to deal with those particular problems. But then again, I mentioned what happened was the Europeans came along and messed up the whole thing. Yes, they came with their swords, that was bad enough, but far worse was that they brought their banks. And that particular curse, Western banks that are based on interest, remains with us today. The Prophet ﷺ said to his companions over and over again, once the prohibition against riba had been revealed, that they needed to free their businesses, free their lives from any sort of interest. One of the things he also said to them was that a day will come, لَيَأْتِيَنَّكُمْ زَمَانٌ, a time will come, when riba will so encompass the earth, it will be spread all over the entire globe, interest, that no matter how hard you try, you'll still be able to smell it. It'll be like smoke. Tashummu bukharahu, you'll smell the scent of it, regardless of where you are. So no matter how hard you try to avoid riba, it'll still be in the atmosphere, basically. And that's exactly what the situation is today. Allah subhanahu wa ta'ala prohibited riba for a number of reasons, and the mufassirun, the muhaddithun, even the fuqaha, many of them have written lengthy explanations as to why that prohibition happened. But from my perspective, I look at this and I realize really that the reason that the Almighty had prohibited riba is because it hinders the development of a Muslim society. Muslim society should be based on doing righteousness and working together. فَتَعَاوَنُوا عَلَى الْبِرِّ وَالتَّقْوَى. Right? And that's impossible in a situation where you have riba. Why? التعاون على البر والتقوى. Ta'awun means working together. And working together means not only in coming together in the masjid, of course, that's, and in all of the different kinds of ibadah. That's part of it, absolutely. But it also means working together in your economic life. Allah subhanahu wa ta'ala prohibited riba because riba is not the right way to do business. The right way to do business is to work together as partners. When you work together as partners, what happens? It forces you to take an interest in what your brother or brothers are doing. We established, I mentioned Abu Ismail, the head of the trade guild in Cairo in 1600. Abu Ismail worked in that guild with dozens of like-minded traders, but all of those were people that he knew, people that he trusted. When you decide that you're going to invest your hard-earned money in a business with somebody, you're going to go into a partnership with somebody, you're going to make sure that that somebody is somebody that you know and somebody that you trust. You know that they're going to be honest with you, you know that they're going to be transparent, you know that they're going to be responsible. They're going to do what they say they'll do. All of which means that you're going to come together. And the bigger the business, the more people who are involved, right? So you have, we had historically communities that were very, very cohesive, Muslim communities all over the world. We knew our neighbors because we worked with them. We knew our neighbors and we trusted them. And people knew from childhood, when they were very small, that they had to become responsible and honest and responsible people, right? In business and in the masjid. I mean, it was the whole picture, the whole package. It wasn't just enough to be a good businessman. You had to be a practicing Muslim as well. So all of this works together. All of these factors, when they come together, they assist in the building of a real and strong community, one that's connected. This is the hikmah, or the wisdom behind, or this is one of the wisdoms, because there are certainly many, behind the prohibition of riba. Between the conventional banking system and the Sharia perspective on finance, there are a number of fundamental differences. To begin with, Sharia looks at money as a measure of value. It has no real value of its own from a Sharia perspective. Imam al-Ghazali, Abu Hamid al-Ghazali said, you could use a piece of leather for money. Didn't really have to be, it could be anything. But it's simply a measure of value. In and of itself, it has no value. And having no value of its own, it can therefore not be used as something that would generate more money. That's the first principle, or the first principle where we differ with conventional finance, because conventional finance says Oh, money can make money. Absolutely, it has a great deal of value. You just keep, you have $1 and you can make $100 out of it if you do this or that with it. Not through profit, but you can trade it back and forth, or you can speculate on it, or you can use it, you can bet on it. But that's not the way we look at it. Or they consider it a commodity. We don't. It's a measure. That's it. The second fundamental difference is that we consider debt and to be a moral obligation. That being the case, the Sharia prohibits trading debt or discounting it, or trafficking, more importantly, trading in the debt of others. The modern world thinks nothing of trafficking in the debt of others. That happens all the time, and to the tune of millions, hundreds of millions of dollars every day. The conventional financial system actually, speculates. You can make money. You can buy paper on Wall Street, which is essentially a bet that one government or another, for example, the government of Poland, in 6 months, will pay up its debt, or it won't. You can actually speculate and make money on that. So that's another fundamental difference that we have. In an Islamic system, or according to the Sharia, one economic dollar, in other words, let's say 1 bushel of what's equal to $1, 1 bushel of corn, let's say. 1 economic dollar will equal 1 financial dollar. All right? What do you think the value of 1 economic dollar is on Wall Street? Well, it could be anything from $10 to $100 to $1,000. Whoever is foolish enough to be able to buy some of the crazy financial products that they've developed on Wall Street, they'll sell it to them. Even if they happen to be, if the buyers happen to be these investment banks' own clients, they'll sell them toxic financial instruments. And we're witnessing now the results of some of these sales as the regulators here in the United States begin to start to fine some of these banks. In fact, if I were to ask you now, which bank of the well-known banks, which bank do you think has not been fined more than $100 million in the past 12 or 18 months? Is it Citibank? No, sorry, they were fined. Is it HSBC? No, sorry, they were fined. UBS, Deutsche Bank, Bank of America, Wells Fargo. Have all of those banks actually been fined for their misdeeds, for their cheating? Yes, they have. All of them. Barclays, the list goes on. They've all cheated. Why? Because that's their mentality. The whole financial system that we live in today is essentially a la'na. It's a curse. Let's get back to fundamentals. What does that $1, where does that $1 that's issued by the U.S. Treasury, what's behind it? What kind of value is behind the dollars in my pocket and in yours? Hawa. Air. Right? Air. Well, they have something better than air now. What? Well, oil is a real asset. Yes, it's traded in dollars. Yeah, well, that's another story. We can get to that at some point. But let's look at this fundamental thing right now. What's behind that? There used to be something called the gold standard, right? Used to be. No longer. Okay? It used to be, when I was a kid, we used to talk about Fort Knox and wonder, really what's buried under the ground there in Fort Knox, because that's where they kept all the gold, right? Well, no longer. All that gold has been shipped up. There may be a little bit left there. I think probably it's empty now. But all that gold is nothing now as far as the U.S. Treasury is concerned. They're free of gold. So what's behind the U.S. dollar? The word of Uncle Sam, right? How many of us believe what Uncle Sam tells us? What we have right now in the world is a situation where everyone has to believe what Uncle Sam tells them. They literally have to believe it. Why? Because otherwise, the world would really be in a major financial crisis, and everyone understands that as well. What I'm trying to say is that the U.S. dollar, and therefore, which happens to be the reserve currency of the whole world, the U.S. dollar is pretty much worthless. It's been shot full of air. It's pumped up like a balloon. And this is the situation we live in, and it's all attributable to one thing, and that is riba, the whole system of interest, and the idea that money can make money. Right? When money is really nothing more than a measure of value. So we've lost sight of what real value is. Moreover, when you lose, you begin to lose sight of what real value is when you imagine that the haram is the same as halal when it comes to value. That's another fundamental difference. If something is, if a commodity or a substance or a service happens to be haram, then from our perspective, from a Sharia perspective, it has no value whatsoever. In the modern financial system, however, that doesn't matter at all. There's no consideration for haram or halal, obviously. If people are stupid enough to buy things, or to buy services, or to do things, whatever it is, and someone can make money out of it, whether it's a lottery or whatever, all of these different sin industries. The government doesn't care, the U.S. Treasury doesn't care, it's money, so they're happy with it, it doesn't matter. But the situation with so we live in this very extremely fragile economic system at the present time. I lived for several years in the Gulf, where oil is king. And I actually suggested to one of the strategic studies institutes in the Gulf that, that since they have so much oil, why don't they become the first ones to say, we have real value, we have that commodity, that oil, even though it's less valuable than water. We have this commodity, and we know that our economy will remain stable. So from today onwards, we're going to have nothing to do with all of this imaginary khayali pulao that the U.S. Treasury is trying to sell to us. No one is brave enough to take the first step, and probably it would be a foolish step, considering the world economy, because it is now based on this myth, and everyone has to buy into it. They realize that there is no alternative. But what is the result of living this myth? The result is the hills and valleys of boom and bust. We've become accustomed to this idea that every 10 or 15 years we're going to have a boom, and then there's going to be a downturn, and things are going to be tough for a while, and then we wait another 10 years and things are going to get a little bit better, and so on and so forth. Right? This is what we live with. We understand this. We assume that this is just the natural way of the world. In the same way that we assume that if prices continue to go up every year or every 6 months or every 2 years, whatever the case may be, if prices continue to go up, then that's the natural order of things. Just this afternoon, I received an email from my brother. He found a newspaper clipping from 1965 when my mother, who happened to be a very successful real estate investor, bought or started a project for a whole hotel, like one of these, you know, the Embassy Suites or one of these. It was a Howard Johnson's, 72 units with a restaurant, 2 restaurants and a swimming pool, the whole thing, right? How much did that cost in 1965? At the bottom, the price was there. $1,140,000 on 6 acres of land downtown Hyannis, Massachusetts, which at the time was the home of the President of the United States, right, John Kennedy. So $1,140,000, 1965. My father, who was an architect, built his own dream house on Cape Cod for $35,000 in 1965. What can you buy today for $35,000? What kind of a residence? And what kind of a business, what kind of a hotel can you buy for $1 million? But we just accept this, right? We say, well, that was way back then, things have changed. Did you know that in the Roman Empire, the price of a bitich, a watermelon, never changed for 500 years. It was the same 3 dinar or whatever it was, 5 dinar. It never changed. Why? Because they had a stable currency. Why are the changes now? Because our currency is full of air. There's nothing behind it. All of this is dangerous. All of this is what ensures that the great majority of people living on this planet will continue to live in poverty and will continue to be hungry. Even in this great country of ours, children go to sleep every night, not a few 10,000, not 20,000, not 100,000, not 200,000, but millions of children in this country go to bed every night hungry. What about the other countries in the world? And why? It's because this is worth nothing. And why is this worth nothing? Because the whole world has bought into the idea that the best way to run your economy is to run it on the basis of interest. That's why. From our perspective, again, from the Sharia perspective, one of these fundamental differences, from our perspective, the act of lending and borrowing is what? Is it business? It's charity, right? It's charity. When I lend my brother $50, or if I lend him $5,000, what is my niyyah? My niyyah is that I do so liwajhillah, fi sabilillah. I make that loan on the basis of my faith in Allah subhanahu wa ta'ala, and that I will have a reward in this world or in the next, or maybe in both. I don't expect that my brother will pay me back. I hope so. I mean, you know, that's what we agree to. I'm lending it to him. It's not a gift. It's a loan. So the expectation is there that, yeah, he'll return it when he can. Or maybe we've even written some terms, within a certain period of time. But if he doesn't, then what do I do? Do I take him to the court? No. I just say, Subhanallah, Alhamdulillah. One of these days, inshallah, he'll come around, and maybe his situation, he has some difficulties or whatever it is. But I'm not worried about it, because when I performed that act of lending, I did so out of the goodness of my heart, hoping that Allah subhanahu wa ta'ala would give me a reward. It's charity, right? Now that's, again, a part of that ta'awun ala al-birri wa taqwa. So, but what's happened is that in the conventional riba-based system, the act of that very simple act of charity has been perverted into something absolutely horrible, and that is a business. How can you take charity and turn it into a business? You see, so this kind of perversion of the maqasid, the higher purposes, which Allah subhanahu wa ta'ala has taught us about, can only lead to misery. This is, we have seen it in our lifetimes. The older we are, the more often we've seen it. But even the younger ones amongst you have witnessed it just a few years ago. And the results have been devastating. What happened was all of those Wall Street bankers who literally played with our money in order to enrich themselves, to feed their greed, went to our government and said, please help us. If you don't help us, our whole economy is going to go down the tubes. And our silly government decided that, we have to help them. Big mistake, big mistake. So now we have just a continuation of the same rotten, corrupt, greed-ridden system. And it's not only here, it's worldwide, unfortunately. Alhamdulillah, post-World War II, when many Muslim countries around the world rid themselves finally of the European colonialists, Muslims began thinking in terms of their own future. And when we thought about establishing our own future, now that we were free of those influences, the first thing we turned to were our institutions. We knew that they had been co-opted by the Europeans, and we knew that we had to do something about it. So we looked at our political institutions, we looked at our legal institutions, our educational institutions, our charitable institutions, our financial institutions, and we attempted to bring those back to, or to bring those into some sort of harmony with our understanding of our own religion, Islam. We looked at the Quran, we looked at the Sunnah, we looked at the body of Fiqh, and attempted to Islamicize these different institutions. And one of the important institutions, of course, was the financial institutions. And so during the decades of the 50s and the 60s, people like Abu al-Ala al-Mawdudi, people like Sayyid Qutb, Baqir al-Sadr, a handful of Muslim thinkers began talking and writing and lecturing about an Islamic economic system and how it should look. Over the years, more people joined the conversation. Books were written, papers were written, seminars began to be held, and by the mid-60s, by the 70s, people thought, well, maybe we've come far enough now that we can think in concrete terms. Let's try it out. Let's open up some real financial institutions of our own. And that was when the first Islamic banks opened their doors for business. I think the Dubai Islamic Bank opened up in 1975. It was followed shortly after by Al Baraka, Faisal Islamic, and a handful of others, such that by the 1980s, there were maybe 20 or 30 Islamic banks in the world. Kuwait Finance House was one of them. And from day one, the interesting thing is that our Islamic banks started taking money in, because as soon as Muslims learned that there's an Islamic bank in town, they went to it. They brought their money to it because at last there's an alternative. You know, before that, you either kept your money in a mattress or you put it into a conventional bank. Many Muslims, of course, when they used conventional banks, they simply, they refused to take the interest. But, we were still giving money to the colonialists, and we were still in that, perpetuating that system of riba. Our Islamic banks began to grow as more and more money came in. And the situation was that we had bankers who knew very little about Sharia, and we had, on the other side, Sharia scholars who knew very little about banking. So there was a learning curve on both sides. The bankers had to learn more about Sharia, and the Sharia scholars had to learn more about banking and finance. And that really, again, that was a process that took another decade or two. So that by the 1990s, the number of Islamic banks around the world had grown to maybe about 200, 225 banks with several thousand branches in more than 40 or 50 countries in the world. But that was still a very, very tiny beginning for the industry. Nonetheless, it was growth and it was significant, and people started to notice it. By the late 90s or the mid-90s, the bankers on Wall Street started to notice it. Why? Because the Islamic banks needed help with investing. They needed to cooperate to one degree or another with the banks that were already existing. It is absolutely impossible for our banks to exist in total isolation. They happen to be in the midst of this very corrupt system, but it is the system. And every government has rules and regulations, many of them designed to protect consumers, so that anyone who wants to sell stocks, for example, anyone who wants to give financial advice to other people, anyone who wants to open a bank or an insurance company, any kind of financial services, all of that is regulated very closely all around the world. So our Islamic banks had to operate within the same regulatory system. And so we had to find solutions that would fit or comply both with Sharia principles and with the rules and regulations, the laws and the statutes established by the different jurisdictions in which our financial institutions were doing business. So we had this double task, and that's why the bankers had to work a little harder and the Sharia scholars had to work a little harder. By the 1990s, with those several hundred Islamic banks being opened, and then we began to see asset managers as well step into the picture. There were by the mid-90s, there were a few efforts to establish alternatives to insurance as well. So these were called takaful companies. They began as well at that time. And another important development at that time was that the international law firms began to be interested in Islamic finance for obvious reasons. The obvious reason being what? Islamic finance was making money. It was growing faster than the conventional banking system. So the lawyers, like turkey buzzards, flying, circling around their prey, they see economic advantage in one sector or another and they come down. Which is not to say that all lawyers are horrible, but that's the simple reality. Once they noticed that Islamic finance was for real, that it was making progress, it was making money, then they stepped into the picture. And I can't say that I'm sorry that they did, because they actually helped us a great deal in our development. Because as many of you understand quite well, I'm sure you're professionals, many of you are business people. In today's world, you can't accomplish anything without the help of a lawyer. If you're going to, pretty much regardless what kind of business you're in, you need legal advice. It's just the way of the world nowadays. The interesting thing is that a lot of those lawyers became fascinated by the concepts embodied by Islamic finance. And as a result, they really applied themselves to the task of helping out. And so the conversation or the dialogue between Sharia scholars and bankers, or Sharia scholars and business people, was expanded to include Sharia scholars, lawyers, and business people. So when you had the three teams sort of begin to work together, then things really started to take off. So by the late 90s and the early 2000s, we had a period of major innovation. I'm sure many of you have heard of sukuk. Sukuk are a relatively new invention. They basically came up at that time. The whole takaful industry was really developed at that time as well. And it was at that time that we launched, for example, the Dow Jones Islamic, the first index for the stock market. Scholars around the world came together and agreed pretty much on a consensus basis on the criteria for investing in stocks in the stock market. All of this assisted in a major spurt of growth for our Islamic banks, because, as I said to you earlier, the Islamic banks never had any problem taking money in from depositors. The problem that they had from day one was what to do with that money. Because the conventional model for a bank is to take money from depositors at a low percentage and lend it out at a much higher percentage. So when you, the depositor, go to the bank and put your money in, they say, okay, thank you very much for your $10,000. We'll give you an annual rate of interest on which you'll get a return of 3%. Then what do they do with that money? They take that money, that $10,000, and they go to XYZ company, and they say, well, according to your credit profile, I think we can give you the loan that you're requesting of $10,000 at 12%. or 13%. Let's make it 13% so it's simple. What happens to the 10% in between? Right? They're borrowing the money from you at 3%. They're giving it out to XYZ company at 13%. In between, there's 10%. Where does that 10% go? It goes to the bank, right? So that's the net interest margin, the NIM. That's what that is the model of borrowing and lending that enables banks, commercial, conventional banks, to make money for themselves, for their shareholders. Right? It's all based on riba. Our banks obviously couldn't do that. Our Islamic banks, no. They had to find other ways to deploy their money. Now, the ideal way to deploy the money would be in business partnerships, right? But those opportunities were limited. The other way is to invest the money in some real assets. Buy some oil, buy water, buy spices, buy saffron, buy real estate. Hold on to it for a period of time. Hope that the market will show some increases in prices, and then you can make profits. So our Islamic banks are based on making profits through business rather than making money through borrowing and lending. But in order to do that, you also have to, those Islamic banks also have to comply with the rules and regulations in whatever jurisdiction that they happen to be located in or where they're doing business. Now, most of those rules and regulations are based also on the idea that banks are involved in the business of borrowing and lending, and that their profits are based on interest, right? So the regulations are aimed in that direction as well, which puts the Islamic banks into a very, very difficult kind of a position. According to the regulator, a bank in the United States, for example, well, any bank, according to regulators, any bank should have what they call adequate capital to cover a run on the bank. Let's say that people decide, a huge group of depositors decides one day that they're all going to go to the bank and take their money out, right? Well, does the bank have enough cash in its vault to be able to handle that sort of a situation? And of course, they use statistics and they use actuarial studies and so on and so forth to determine just how much they would need, because obviously not all of the depositors are not going to come in at the same time, but you may see 4 or 5% of them coming in and asking their money on one day. Whatever it is, however they calculate it, the regulators insist that there has to be adequate capital. So they have something called the capital adequacy ratios. And in order to meet that, banks need to hold, according to the regulators, an amount of cash, and they also need to hold what they call liquid instruments or securities that can easily be traded for cash in the market. Now, those securities are generally based on debt. They're bonds or they're U.S. Treasury bills or they're money market funds or they're overnight interbank loans, all of which is haram from our perspective. So our Islamic banks cannot hold those kinds of assets. Our Islamic banks are holding real assets instead of this phony baloney paper. But the regulators even though they can see that real assets are much more valuable than the kind of paper that most banks, that they insist the banks hold. Even though they see that, their regulations are not aimed in that direction, and they just, they insist that we should have those things, and if we don't, then they'll put us out of business, they'll close us down. So there was a great need on the part of Islamic banks to manage their liquidity, to manage their cash, and as a result, we developed alternatives. So one was the commodity. The major alternative for managing treasury became the commodity murabaha. And the regulators allowed us to do that because commodity markets are very liquid. If you hold a commodity contract for gold or for petroleum or for wheat or for beans or whatever the commodity happens to be, or precious metals or semi-precious metals, that's almost the same as cash, because you can go to the London Metal Exchange and in a minute you can get cash for it. So that satisfied the requirements of the regulators. But we needed more than that, and that's why we developed sukuk. Anyway, I'm kind of going off on maybe into too much detail, but what I'm trying to say is that as the industry grew, the Islamic financial industry grew, as it grew, it became more and more complex and subject to more and more regulation. But the simple fact of the matter is that it continues to grow more and more all across the Muslim world, and hopefully in Muslim minority communities around the world as well. And I'm hopeful that it can grow here in the United States, and I'm fairly certain that it will. It's an interesting fact that our community here in the U.S. is comprised, maybe 50% of our community are people under the age of 20 years old, which means that, mashallah, we can expect to become bigger and bigger and bigger in the future. Our community is growing that way. As our community grows, its needs, financial needs, will grow as well. And I think that we're fortunate to be living at this time in history because the growth of our community here coincides with the growth of Islamic finance worldwide, which gives me hope that within the next few years we'll begin to see some Islamic banking activities here in the United States. I'm hopeful that we'll see some Islamic takaful companies because we own assets, we own cars, we own homes, all of those things. We own businesses, we own commercial property, residential property. All of that needs to be insured, in many cases by law. I mean, we have no alternative. In many states in the United States, you have to have insurance for your cars. I don't know what the situation is here in Texas, but I would assume that you have to have insured a car if you own one. Likewise with homes and so on and so forth. So where there's a need, it's a simple, supply and demand kind of situation. It's simple economics. Hopefully, we will be able to see Islamic products coming into the market such that we can save for our own retirement in a Sharia compliant manner. We can save for our children's education in a Sharia compliant manner. We can buy our homes, buy our cars, finance our businesses, everything in compliance with Sharia, so that we can get away from this curse of riba. At the same time, however, because the situation, because the society, again, is so permeated, will continue to smell, right? That bukhar. We will continue to smell the smoke of riba, no matter what we do. But it's possible that the rest of the world will begin to pay attention. And in fact, they have. In the last crisis, 2007, 2008, following that crisis, you know, every year there's this Davos meeting, the world's leading economists and you know, secretaries of treasuries and you know, the governors of the state banks and so on, in Switzerland at a place called Davos every year to discuss the world's economic situation. So post-crisis, 2009, 2010, the subject of Islamic finance actually was discussed at Davos. Why? Because they noted that while the banks on Wall Street, the ones that were too big to fail, had to be bailed out by the government, and several of them actually failed. Well, Bear Stearns is no longer with us, and so on, Lehman Brothers. Several of them failed. But what happened with the Islamic banks? The Islamic banks continued to be profitable throughout the whole crisis. Our financial institutions did quite well in the crisis, with the exception of a handful that had invested heavily in real estate only, because the real estate markets worldwide suffered greatly. But for the most part, our banks did remarkably well. I'm not sure which one it was, but one of the major commercial banks, a conventional riba-based bank in the Gulf, in the Emirates actually, hired McKinsey and Company out of New York to do a study and explain to them what they could expect in the coming years after the crisis. When McKinsey did the study, they came back and told them what you can expect is increased competition from Islamic banks, because people have realized that Islamic banks are far better for them and for their money than you are. So you're going to lose market share. And this was back in 2009, and since that time it has happened exactly as they said. So much so that Sheikh Mohammed in Dubai just a few months ago announced that his government was going to actually actively promote Islamic finance in the Emirates. And likewise, all the other GCC countries. Pakistan, increasingly, we're beginning to see more and more Islamic banks and financial institutions, investment houses, begin to proliferate in Pakistan. The best example is Malaysia. In Malaysia, about 10 years ago, they took a decision that they were going to, the government took a decision that it was actually going to promote Islamic finance. And now, I think they're approaching something like 30% of the banking sector is now Sharia compliant, and they, in the foreseeable future, they think that by 2020, 2025, they'll have about 50% of the banking sector. So all of these indications are good, but at the same time, like I said, we live in the middle of in the midst of a system which is very, very fragile and very dangerous because it's based on riba. So whatever we can do to get away from riba, ourselves as individuals, our families, our communities, whatever we can do, it will help. And inshallah, as we move further from further away from riba, hopefully we will come closer together to one another, and we will become a stronger and more vibrant community here in the United States and around the world, inshallah. Well, thank you. I think I've spoken for probably a lot longer than I should have. No one seemed to object, but I appreciate the fact that you didn't yell at me. So thank you very much. Shukran lakum. If you have any questions, I'd be happy to talk with you. And that's